How do you see the market so far?
The market is doing exceptionally well. We've got off to a very strong start. The best start probably in about 12 to 13 years. So it's been a very good start, and nothing can stop it. In fact, if you look at today's rally, the market is very strong. The Dow is very strong.
Yeah. And this is the second week of the new year. So what have we seen from the first week and second week? Is there difference?
So far, no diversity from the first week to the second week. And as I said, what's very impressive is today we have a very strong market, and yet we have a very weak bond market. Yields are moving higher.
Sure.
The 10-year note is above 253 right now, and yet the market continues to power ahead. This is very impressive, and I would say that most market forecasters, including myself, are surprised at this. But yet, the market continues to focus on tax reform that is now law, and the upcoming earnings season, which probably is going to be good. But I guess what the market is really looking forward at is the fact that once the full tax cuts kick in, then that means even stronger earnings growth.
Our viewers may focus on the commodity market. So how do you see things shaping up energy at present?
Well, commodities are strong, and the strongest of them all are oil prices. And if you recall our last few interviews, we indicated to you that oil prices were probably going to top $60 in the first quarter, and here we are. We're at $63 today, with Brent close to 78. And so I think we're looking at an average in the first quarter somewhere between $62.50 and $65 a barrel.
And in view of falling U.S. crude oil stocks and the record high compliance with the production cuts by the OPEC, market participants seems like are convinced by the higher prices that the markets will go tighter. So how do you think?
Well, that's because the market is getting tighter and tighter and tighter. If you look at two factors, one, week after week we see drawdowns in stockpiles, even though sometimes they're not even, but they sort of balance themselves out, a clear sign that the market is getting tighter. Second, if you look at the rig count over the past month, we've seen declines and not increases. Another sign that perhaps we have peaked in terms of U.S. production. We're at high levels, but for now, the production probably is at full capacity. So you can't, increase capacity for the moment. That doesn't mean 6 months from now that's not going to happen. But for now, it looks as though we've peaked in U.S. production at high levels.